everyone, welcome to AdiTrade. Today we're going to be seeing the trade review, the weekly trade review from June 6th to June 10th. And all this trading review will be done, the weekly trade review will be done using CPR, as CPR is one of a good indicator for intraday trading. And if anybody wants to learn more about the CPR, there's a complete video, CPR logic for intraday trading on my channel, and many other learning videos. You can have a check on that. Now we will be seeing the trade review from June 6th to June 10th. Every week I wanted to do this weekly trade review, but was getting busy with a lot of things. So this week and the following week I'll try to do the trade review as much as possible. So this week we'll be seeing whatever happened this week from June 6th. See, this is the CPR indicator. We know CPR, we have the support S1, S2, S3 marked on the downside, R1, R3 marked on the upside, and this is the CPR in the central pivot range. And the black lines that I've used is just to indicate the previous day low and the previous day high. Will be indicated by this black lines, what I've drawn. So first we'll start off with June 6th, Monday. See, we had a pretty flat opening. There was one good trade on Monday, is this small scalp on the downside. And after that, this previous day low was held. And sorry. And then because of this white CPR, most of the day we just remained sideways. So based on the CPR logic, there was one trade, that is when this price tested this previous day low, right? See, one of the logic states that if this previous day low breaks, most likely will hit CPR. That did come, but with a very small price action. Like it was only about from 35,180 to 35,000, about 180 points. So this was one good scalp on Monday, and this down scalp, if anybody could have caught it, those were the only good trades that could have worked for options. Rest of the time the market just remained sideways. In this type of market, even if you enter and stop loss hits, it is good, because if we stay, most likely we would have made loss. The option premiums would have not gone anywhere in this type of a sideways market. Now for this trade, how we could have entered this trade is based on this kind of this bullish candle, two bullish, like an hammer candle rejecting this previous day low. We could have entered with, let me just mark where we could have kept the stop loss. See, these are just the possibilities, what we are seeing, what could have happened. Not necessarily I would have taken this trade for sure. See, on this day, the only trade, see, we could have kept this as the low as the stop loss and taken this trade until CPR. See, on this day, this was the only move I was able to capture, not even this, right? So see, this only if you enter at this point, it is good, right? If you enter at the halfway somewhere here, there's hardly any points left, so there's no point in entering there. So that's why, since I missed this, I kind of refrained from taking this entry, but this was one good short trade that I took. And in our Cosmo Feed group on 6th, we shared couple of see, this was the first thing that I shared, that is, if this previous day low breaks, we could see further dip. But the opening low, the previous day low was here, it had already broken. So if the opening low breaks, we might get a dip further, but that trade didn't get triggered. The opening low never got broke. On a 5-minute time frame, see the kind of wicks. See, whenever we see this type of wicks, right, this is showing a good rejection, that this level is being rejected. So we should not short until this level is broken, right? Wherever we face the wicks. Now for example, over here, see the kind of wicks that was being formed, showing that the CPR has been rejected. So we should not go long until high of this wick is taken out, broken, right? So the same thing here, the trade didn't work. So Monday, what we posted here kind of didn't work. The trade never got triggered. So basically Monday was kind of a no trading day, unless if you have done some scalping for option buying. But for option sellers, this was a beautiful day where they would have minted money like anything. Even if they had sold a safe 35,500 call and say probably the day's low, about 35,000 put, there would have been a nice money. But we will be reviewing entries for option buying. Now this is June 7th, the next day, Tuesday. This was a very good day for us. See, firstly, we had a view, the moment we gap down, right? Let me just put on the EMA. See, the moment we gap down, looking at this is the 20 EMA. I'm just going to put that in red. In my other indicator, I use 20, 50 and 100 and 200, but 20 most of the time for intraday trading. See, I had a view that the moment we got this gap down, and since we had a bearish view in the overall view in the market was bearish, so I had a view that if this low breaks, we could further dip, or we could retest this 20 EMA and then get a dip. That's the exact same thing that I posted in our group, that if 35,000 breaks, we could get a dip in Banknifty to the mark levels. The other possibility in Banknifty is Banknifty testing 20 EMA on the 5 minutes, then getting a dip. Right, I'd even put this chart. So we beautifully got this test. This is the 20 EMA, the line that you see, red line. We beautifully got this retest of this 20 EMA, and let me put this off so it's clear. So we beautifully got this retest and then got a nice dip. See, and the targets on the downside, where we had mentioned based on the price action, was the first one was this 34,930 and the other one was 34,850. We exactly came and took support at 34,850, this level. Why this level was one of our targets was, apart from the CPR level, see, the first target was this, where CPR S2 of daily CPR. The other one was based on this price action. There was a strong support here. Just shifting to a 15-minute time frame. There's a strong support here where I had mentioned that this could also be a good place where we could strong support. So exactly there we came and took support on Tuesday. Yeah, this is the Tuesday's chart. Let me get rid of this line. And we were able to enter only over here. That is kind of this entry when this, still we played it safe. Though I wanted to very badly enter over here, the moment we retested this, just waited for this opening low to get cleared, and then we entered and booked the profits at about 34,840. This was a good trade on Tuesday. This trade perfectly went, and this one candle move until this S1 was so quick. Just that one candle move would have, this two candles move would have got us a lot of money until this target one what we had. So this was a good day, and this was the only possibility that we had where, see, along with 20 MA, what I was waiting for mentioning about the 20 MA is we also got a retest of the S1. See, the first dotted line, the first green dotted line of CPR is S1, the second is S2, S3, right? Support 1, support 2. Now, I toggle between 15, 5 minute and 3 minutes in my intraday timing to see the charts. It's best if it is always done like that, between 15, 5 and... See, on a 15-minute also, we got this nice big bearish candle. And in 5 minutes, this was almost like a tweezer, not a perfect tweezer. We are talking about 7 June, almost like a tweezer, but it's not a perfect tweezer, but we got a nice bearish candle. So this first logic was retest of 20 MA. And then, see, most of the times, if you see, the price retests 20 MA and then falls, right? There's a detailed video about trading moving averages in our CosmoFeed group. If anybody wants to watch, they can just click on the link below and join and watch the video. It's for free. So along with this 20 MA retest, there was also a retest of S1, and then we had a dip. And in the end of this video, I'm even going to talk about the retest. That's the kind of price action takes a retest of all the support and the resistance level, right? I'm going to talk about that. We are seeing that a lot. lately. So how to trade and whether it is good for option buying or futures trading, I'll be just talking about that at the end of this video. Now this was the day where there was an event based news. I did notify in this group also that there is an event based news. It's best to stay wait until that event gets over where the RBI governor was making some announcement. So wait until that is done and then take a trade. So this was a pretty choppy trade, but even here the CPR logic worked very well. That is rejecting R1 until CPR. Even in this choppy day, it did work, but it was good staying out of this trade because you see this kind of candle that came on a 5-minute candle. We made 34,840 and almost like 400, 200 points. The Bank Nifty moved on just one 5-minute candle, right? And it's not one-way move. This type of high wick candles are like indices. You don't know whether the market is going up or going down. So what happened over here is when kind of this trend line, let me just put off the indicator and the EMA and draw this trend line. See, there was this kind of a trend line that where the Bank Nifty was taking resistance at many times. Let me differentiate this with a purple color. So there was this trend line, right? The moment this broke, this was just a blind entry because you see the kind of the RSI that showed there is strength. That is the moment on 5-minute it went above 60. We got a nice up move until this level of sorry, this black line shouldn't be here, until almost close to R1. And even if we had entered right after this candle, right, and captured this two 5-minute candle and closed above, like say the moment we saw this inverted hammer, if we had closed our position we would have been in profit. Then the down move came again. We kind of refrained from taking that trade, but the best entry was when this R1 broke and the previous day high for June 7th was this level, right? So when this level broke until CPR, this was the most safest trade because until this level broke, right, so there was a possibility we could just correct and then again go up, right? But when this broke and then when the R1 and the previous day high broke, that was a good trade on the downside, a good scalp for option buying. So people would have made money in buying calls and buying puts if we had traded rightly. Then this was our expiry date, June 9th. So this, after getting a gap down, our first view was if S1 breaks, we could dip. On this day, I was expecting a dip. See, on this day, I was expecting the market to fall because of whatever the overall view that we had and the US inflation data and everything. The data was supposed to come out, but the market did go up today. On Thursday, it did go up because of the expiry. Probably a lot of shorts were covered, and whatever move we were expecting, this downside move came on Friday. Now, what are the best possible trades is, see, even here, see, there is a detailed video about the CPR logic. There are 4 intraday CPR logic which works beautifully. It has worked all the days on, what do you say, this full week it has worked, but the trading was difficult because of the choppiness in the price action, but the logic worked. One of the logic states that if S1 could not be broken and the previous day low could not be broken, we will hit CPR. We did hit the CPR, but where towards the fag end of the market, not anywhere in between or at the beginning. See, when this breakout came, right, based on the CPR logic, when this breakout came, I kind of thought that this move we would be hitting CPR. So indicated the same thing in our this CosmoFit group. These are the type of analysis I just keep posting. So this is what I indicated on Thursday, that since we have broken this previous day and come, there is a possibility we might touch the CPR. But immediately we fell, and then what happened? The CPR touch came at the fag end of the day. So again this day a day where a stop loss would have hit, or this would not be a good day for trading options. See, when we enter in this type of breakout, right, the moment you see this candles that is failing, we need to exit at cost to cost, meaning not wait for too long and lose money, especially on a Thursday. I'm just going to clear these drawings to explain one thing. See, a lot of the times, in the recent time, a lot of the price action, what is happening is we are not getting this one-way type of a move. Always it is going up, coming, retesting a certain level, and then reaching our targets. The same thing happened on Friday. I'll be explaining that. Now, see, for example, on this day, this was a good support. We could identify right when the market came here and bounced. Again, the market came to the same level, retested this support, and then shot up, right? So with this type of moves, the best thing to do is even next week probably wait for a retest to a level and then enter for our targets to hit. Or we can trade in, see, this type of trade you can't do in options. You cannot buy here. See, if this was the breakout line, see, if this was the breakout candle, you cannot buy here and keep your stop loss here, right? You will be in heavy loss in options. But in futures, you can afford to keep your loss here. If you just check, say, to the swing low, you keep 60 rupees loss and you keep a target of, it's almost 1:2, right? Which is pretty fair. But you can't do the same thing in options. The moment you see this trade is failing, we will have to get out. Otherwise, we will be in big loss. Even if we had bought here by this candle itself, we would have been in loss. That is one thing with options and futures. But if somebody is trading with Banknifty futures, then definitely, yeah, you can keep the recent swing low as stop loss. See, it came, retested this, and then bounced. And I also had a view that, see, if this, because of the bearish view that I had, right, so I also mentioned that if this trend line breaks, we could slip, but that never happened. That is basically this trend line. We were also at the monthly pivot. If this trend line breaks, see, I was expecting a move until you can watch the Monday analysis video that will be posted by end of today or tomorrow. So I'll be explaining why my view was bearish on this day, because I was expecting a level of 34,600 to hit because of the weekly CPR that we had. Let me just show it in brief. See, this is the I use weekly, monthly CPR and the daily CPR for analysis and trading. So we should always build the view with monthly and weekly CPR and trade based on the daily CPR. But there was a strong weekly CPR support since we were trading below this S1 of weekly CPR, right? So I kind of expected a hit of S2 on this Thursday, but we went up and then this hit came on Friday. So these type of things happen that which is not in our control. Now the last day of the last week was June 10th, Friday. See, this was a pretty simple trade. There was nothing so complex about it. Why simple is, the moment the market opened, it gave us a beautiful price action. That is, we dipped and then we were sideways. So we were basically in this kind of a sideways move for until 11:20, almost 2 hours into the market, right? Posted the same thing here, and it did look like both things is possible. One is, this is what I posted, that we could even swing on the upside or we could swing on the downside if this consolidation breaks. Why upside is, it could also be that previous day low could not break when you check on 15-minute time frame, and we could reverse until CPR, or this previous day low and testing this 20 EMA could break and we could come and test this, at least this S2 of daily CPR. So there was a possibility we could swing both ways, but the bias was on the downside because of the US market that went down and stuff. For a long time, this is the 15-minute candle. For a long time, it was very uncomfortable. When you have this type of high wicks, right, it's very like inconclusive to decide which side the trade would go. That was exactly what was happening here. And the best entry was when this breakdown happened, and then we tested the daily S2, and even we came until 34,348. And why this level perfectly we took support was there was a gap. I'm just going to the 15-minute chart and indicating. So there was a gap that was pending to be filled in Bank Nifty. We kind of came and almost filled this gap. Even this move was beautiful. See, again here, why am I telling about waiting for retesters? See, what happened here is we got a breakdown. Now after this breakdown, if we had entered, now say if we had bought 34,500 put or 34,600 put, okay, immediately we wouldn't have been in profit. We came, retested, and then fell. At this level, we would have been in profit, right? Over here, we would have been in loss. See, again here, what happened? We broke a level, we came, retested it, and then got a nice dip. See, once you get this move, we can trail stop loss easily. But at this move, trailing stop loss is difficult because the moment you enter, you are in loss. Correct. So that's why I think this is happening a lot nowadays, where we are breaking down a certain point, retesting, and then getting the bigger move. So next week we'll be pretty careful on that. We'll wait and see if we can wait for a retest of some level and then get a dip. See, in Friday, this was a retest of this break. This was the support that we had, right? So we broke that down, came, retested it, and again fell. And even on Thursday, you see, we broke out of this. We took support here. We broke out, came, retested, and again shot up. So that's the reason I would say wait for a retest or a pullback in whichever direction we are having the view for trading, and then probably take a trade. See, if the market had to go down from 35,000 to 34,800, why couldn't just go in one way? That is not how the market functions, right? We got a gap down, we came, retested a particular support or a resistance. In this case, this S1 was acting like a resistance. We retested and then fell. So even tomorrow, the next week, we're going to be careful with this type of retest of a support or a resistance and then enter. And with this type of market where we get a lot of choppy intraday moves, right, the best thing to do is trade in futures then options. If someone has the capital to trade in futures, it is best to go with futures. Even I'm planning to shift a little bit of my trading into the futures part, where I'll trade the futures then buying options. And option buying can be done when we have a narrow CPR like this, where you have throughout the day you're breaking lower lows and lower highs, right, based on the Dow theory. So those are the days where you can do nice option buying trading. And there's a detailed video about CPR logic for intraday trading. Just watch this video. It's pretty helpful, and based on that video and the CPR logic, I have not made the logic. It is done by somebody. I've just made the video. This was one day where we could have traded. This was one day where we could have traded based on logic. This was a day we could have traded. This was a day we could have traded. And this. So based on the logic, all 7 days we could have traded easily. But trading with option buying was a little difficult last week. That's what I felt. So I'm going to be doing the analysis video for Monday. So please do have a check on that. And that's it with this trade review for now.